I think Mexican fixed income had already outperformed the rest of the region, and I think it will continue to outperform, especially those countries like Peru, Colombia, and Brazil. Of course, Chile, it's in a different category of Mexico. Chile is double A rating, credit rating, so it's kind of different, and the bonds behave in a different manner as the rest of emerging markets. But I think in general, Mexico will outperform for the next months. I don't want to sound too obvious, but I think a lot of opportunities will come in the energy sector, and I think in the energy sector, especially in a gas distribution, pipelines, etc. And also there could be a big opportunity in terms of what is going to be the Fibra E, or the Mexican energy infrastructure projects. And I think without those MPLs, probably we're going to see a lot of Pemex contracts in terms of oleoducts, in terms of gasoducts, in terms of distribution, and I think those sort of things will be the first level of FDI that we could recall in the energy reform. Also, in terms of electricity, I think there could be a lot of double cycle plants going inside. So I think mainly will be everything linked to energy reform and infrastructure. Volatility in FX has been everywhere, and I think what is happening really is that the dollar is getting strength around the world, not only against emerging markets, but also against euro and against the yen. So what we have seen is the more vulnerable countries are really suffering a lot in terms of depreciation of the currency. I'll say that Mexico has behaved a little bit conservative as compared with Russia, Colombia, Brazil, etc. Mexico depreciation is very similar to Canada, and I think what is happening here in these terms of volatility is a lot of dispersion in real terms against the dollar. What we have seen in Mexico locally is that there has been hardly any pass-through. So in terms of local rates, they have really behaved well, because they haven't had the volatility. All the volatility has been absorbed by the FX, not by the local interest rates. So when you see these investments in terms of in pesos, I mean, they have outperformed very well. They have behaved very well. Positions in foreign hands have stayed stable. So we haven't seen any sell-off of foreigners in what their positions have been in bonds. So I think the peso has been linked to the volatility around the world, has outperformed most of emerging markets in general, and local rates volatility has been very, very low in this cycle. Every time I came to this event, it's more packed. It's more people, more investors. I think people is very interesting. I think what the panels have moving forward to be very uptight and very serious, to become more like a discussion, and in which all the panelists can participate and even have different point of views. So I'm very comfortable and very glad to be here.